All right, good morning. Welcome to Daily Rates Live with the Mortgage Calculator. We're going to pull up some live rates today, and then we're going to do a deep dive into Condotels, a topic we haven't touched on in a long time. Great topic. So we'll get to that in just a minute. In the meantime, while we wait to go live on all the different platforms, go ahead and drop a comment there in the chat. I see some comments were already coming in. We definitely appreciate that. So keep dropping comments there as you tune in. You can drop any questions that you have as we go through the deep dive topic as well in the chat. All right. Thank you for the comments coming in. All right. Looks like we're live on all the different platforms. So we'll go ahead and get started again. As you tune in, drop some comments there in the chat. Drop any questions you have, but we'll go ahead and get into it here. So, welcome everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a correspondent lender, and what we do every morning at 11 a.m. Eastern on this show is pull up our actual live rates for the day, and then we do a deep dive into a different loan topic. Today's topic is going to be Condotel. So, our sales manager, Jose, with 28 years of experience and experience in Condotel, since we are in South Florida, we'll do a deep dive into that topic here shortly. But before we do that, we'll do what we do every morning, which is pull up our pricing tool and go through the rates. So, Nick, if you're ready, let's go ahead and check out what the market is looking like this morning. I know there's been up and down activity, so let's see what it looks like today.
All right, let me change my screen and we'll check it out. So this is our pricing tool, which will show us the general rates for today. It is February 7th, just after 11 a.m. Eastern, so most of our programs are live here. If you'd like a full breakdown of a full loan estimate with all the itemized fees that go into the APR, please get with our team members. We have over 250 licensed loan officers. For the demo today, as we do every day, we'll set up a basic scenario, $400,000 loan amount. We'll set the LTV to 80% loan, 20% down payment. And we'll ask the computer to find the lowest rate so we can compare our conforming conventional options with our FHA options, which is usually the next best option for most borrowers. And then we'll check out our non-QM, also known as expanded guidelines here, where we have over 5,000 additional options. We also have VA and USDA. VA is only for eligible vets and active service members. If you are, just let us know. And USDA is only for eligible properties. If you're looking in one of those areas, just let us know. We'll start with conforming conventional, purchase, 30-year fixed standard loan, primary occupancy, single-family home, 1 unit, state of Florida, county of Miami-Dade. For all the demos here, we'll use an estimated FICO score of 760 and an estimated debt-to-income ratio here of 40%. So let's check the rates this morning. All right, went down a touch. There was a little bit of upward momentum last couple days, and then yesterday it relaxed a little bit, so a touch lower than it was yesterday, I believe. 6.25 rate, 2.5 discount points for a final APR of 6.544 for today. So a good option for our customers using conventional. And if our customer has any trouble qualifying for a conventional option, typically the next option we want to compare using the same exact setup here is an FHA option. FHA allows a little more leniency on credit events and issues, as well as a higher debt-to-income ratio. But for the demo, we'll keep everything identical so we can compare apples to apples here on the APR. And this went down also just a touch from yesterday. It looks like best option at the top, 5.5% rate or 2.375 discount points and cost, puts the final APR 6.428. Just a touch lower than conventional there. And remember, this APR does include the upfront and yearly mortgage insurance that is required. So it's a good option for our borrowers that need to use FHA, and our customers that qualify for both conventional and FHA definitely don't overlook these options. Now, where we love to specialize here at the Mortgage Calculator is if, unfortunately, our customer doesn't qualify for any reason. Most other banks or lenders will have to deny that customer. But that's where we love to present our 5,000 additional options here under expanded guidelines, also known as non-QM. So when we select this option, everything else will stay the same, but now we have a new button pop up for income verification. So full documentation is what we use for conventional and FHA. That means 2 years of tax returns. So if our customer doesn't qualify using their tax returns, we'll typically use an alternative. We have asset-related programs, business bank statement programs. The investor programs are just for investments. We'll show that in a minute. Our personal bank statement 12-month is the most popular. That's what we use for the demo here. We have RSU programs, stated income programs, BOE programs, 1099 programs, P&L programs, and no income CDFI, all kinds of different options. And we have episodes on all those as well. For the demo, we always use the most popular here, the 12-month personal bank statement. And that's for our self-employed borrowers. Many times our self-employed borrowers, when they submit tax returns, may have various write-offs and not qualify at all, or just need a little bit of extra income. Either way, we can solve the problem with no tax returns at all, just their last 12 bank statements, to calculate a debt-to-income ratio here of 40% in the example, using just their cash in the bank, no tax returns at all. So many times our self-employed borrowers qualify for much more income. So let's check out the bank statement options this morning. And these have been going down a touch, as I mentioned, just slower than conventional. So best option today, always amazing, 6.875 rate for 2.225 discount points and cost, puts the final APR at 7.261. So we're within less than a point difference between conventional and using bank statements. So our customers that need to use it, it's definitely a great option. It's very comparable here to conventional. So please get with our team. And you can notice there's hundreds and hundreds of different variations and options. Some of these at a little higher rates and costs, may allow bankruptcies, foreclosures, other credit events that would otherwise cause our customers to not qualify. And some of these options may use slightly different ways to calculate the income. So hundreds of different variations. Please get with our team to find the best ones. And for our final two demos, we always want to do live pricing for investment properties. So we'll set an investment property for the final two demos. We'll set the same 400,000 loan amount. We'll set the LTV to 80% loan, 20% down payment again. And we'll compare the lowest rate options we can offer for conforming conventional, full doc, and then we'll check out our expanded guideline non-QM with alternative income options. Remember, government programs, FHA, VA, and USDA do not work for investments. So we'll start with conforming here. Everything will stay the same as all our demos. All we've changed is the occupancy to investment property. So let's check out the conventional options today. And as usual, when the rates go up a little bit, we have this cool portfolio option. So keep in mind, this is the cheapest today because these portfolio options are not true Fannie Mae or Freddie Mac programs. They do not have the same adjustments. So slightly lower rate when there's no adjustments here. 6.875 rate for 3.25 discount points and cost, puts the final APR at 7.264. And then the lowest for a true conventional option, our Freddie Mac here at the top, 6.99 rate for 3.25 discount points and cost, puts the final APR at 7.382 for the true conventional option. So good options here for our customers that qualify full doc. It was getting a little crazy there when the rates were high, but now it's definitely a good option. But I always recommend for our investors to compare with our non-QM options. So for the final demo, we'll set up our same scenario here. And this time we'll look at our non-QM expanded guideline options for investment properties. Now, first thing we must select is our income type. The most popular loan type and income type for us here at the Mortgage Calculator is our DSCR option because it doesn't require any income or employment documentation from our borrower. We simply use the estimated rental income from the appraisal to determine a DSCR value. It stands for debt service coverage ratio. If the estimated rents can cover the expenses, aka the property cash flows every month, that's a ratio of 1 or higher. We also have options for ratios under 1 where the property may not quite cash flow, but I'll put in 1.5 here so we can see all the best options pop up in our demo. And finally, a prepayment penalty must be selected for a non-QM investment property. 3 years is standard for these programs. That's what we'll use for the demo. There are options for no prepay that will cost more and limit the programs that show up. And there are options also for 5 years for our customers that hold the property to save some money, but does limit the programs. Since 3 years is most common, that's what we use here for the demo so we can see all the programs pop up. So let's check out the DSCR rates today. And we still have options in the 6s, absolutely amazing. 6.875 rate for a DSCR. for 3.025 discount points and costs, puts the final APR at 7.346, almost identical to conventional. I would say 100% of investors will take a DSCR loan when it's the same exact cost, possibly even cheaper than conventional today, which is absolutely amazing. And there's tons of flexibility here too, hundreds of variations. Some of these programs here at slightly higher rates and costs may allow bankruptcies, foreclosures, other issues, may also allow us to use different ways to calculate the income. And DSCR also affords us a lot of flexibility in the property types, which is today's topic. So let me switch my screen real quick. And today we're going to be discussing Condo-Hotels for those that joined us earlier. This is a great option, especially in Florida, and is allowed under some, not all, of the DSCR options that we just showed. That's typically the option that we're going to go with. I'm sure Jose has a couple other tricks up his sleeve. There are other programs where we are eligible, but that's the most common request for an investor looking to purchase a condo-hotel. Those DSCR options, a few of them do allow different property types. So Jose will break down the exact examples since we can't do that in the live pricer with specialty type of loans. So Jose, if you're ready, let's go ahead and check out some examples for condos. First, define condotel officially, please, and then we'll get into those examples if you don't mind.
All right. Good morning, everybody. And a big hola to mi amigo Jamal in Vietnam. Hi, Jamal. ¿Cómo estás? Condotels, not to be confused with condos that allow short-term rentals. First and foremost, I want to say that to everybody out there that's trying to structure a condotel loan. Condotel is a specific type of condo that has usually will have a desk, like the same front desk to receive guests at the property, check guests in at the property. They're also in resort type areas, and usually also condotels will have some type of restriction regarding renting the property out as a short-term rental. Keep an eye on that because it may require putting it into a hotel pool if you want to do that. And also keep in mind that condotels may also have restrictions on how much time the owner can occupy the unit in any calendar year. Normally, if it's going to be in the hotel program, but in some cases, municipalities may have ordinances not allowing owners to live in the property for more than, let's say, 6 months out of the year, or the condo association itself may have those restrictions because they want to maintain more of the resort type environment for the property. So another thing to note then for condos, yes, we do have primary options that you're going to see, but most of them tend to be second homes or investment properties. Now at the mortgage calculator, we have over 5,000 products for all of our different scenarios. So I do have some very good ones to share with you for condos. You'll usually find condos, like I mentioned, in resort areas. So let me go ahead and share our options today with you for condos. Let me make the screen a little bit bigger here. All right. So our first option, primary full doc purchase condotel, 85% loan to value. Pretty amazing there, right, for a condotel. Now, one other thing to note, on all condos, not just condotels, you are going to be required to provide a condo questionnaire. So look at the guidelines of whatever conduit you're trying to structure towards your submission to make sure what the reserve requirements are and see. Usually they're more relaxed for non-QM than there are for agency. Agency reserve requirements for a high LTV loan is going to be at least 10%. But in non-QM, sometimes it's 8%, sometimes it's 5%. And in some options, there is no reserve requirement. They just look at percentage of delinquencies and litigation, right? And condition of the property, obviously now they want to know if there's any deferred maintenance to make sure we don't have any structural integrity issues with the condo. So, but look at this 15% down option for a primary condo hotel in South Florida. And this could be second home as well. But look at this 9.125 lowest rate option, 9.25 lowest cost option, very similar. But again, 15% down, primary occupancy condo hotel. Just make sure that the building, and this is not for us, this would be more for the real estate agent and the buyer to be sure that there are no occupancy issues for an owner living there as a primary residence. So now we have a bank statement option, right? One thing I wanted to note on these on this bank statement option is that if the seller is giving a little bit of a seller credit, let's say 0.75 points of a seller credit to the buyer closing costs, then 85% LTV is an available option for your bank statement purchase primary, right? The cost was just a little bit out of scope for compliance, but if your seller gives a 0.75 of a point seller credit to the buyer closing costs, you can do 85% LTV. That's just another little structure tip that we give you here at the Mortgage Calculator. So in this case, at an 80% on the bank statement loan, you're looking at 9.25% as our lowest cost option, 8.375% as our lowest rate option. Profit and loss. Notice, by the way, I didn't mention bank statement is for self-employed borrowers only. The profit and loss option is for self-employed borrowers only as well. Little bit higher in the cost than the bank statement option, but still very doable. 9.25 lowest cost option, 8.875 lowest rate option. And our 1099, remember 1099s, again, self-employed. We love this for our real estate agents and other contract workers that get 1099 from one contractor, right? They're contracting, well, they're contracting you to work, right? You get a 1099 at the end of the year, you cover your taxes, and we can use 90% of the income from that 1099 to qualify you. No tax returns needed. And very good options here as well. This is lower cost than the P&L. You're looking at 9.25, our lowest cost option, 8.375, lowest rate option. And again, for all of these options that I gave you now at an 80% primary, those you can do 85%. It was just a cost-based thing. So here now we have investment. Now, mainly the Condotels tend to be more investment, second homes as well, but investment, very popular option, especially with short-term rentals being as prevalent as they are now in our society. There's a renewed interest in any property that can allow legally short-term rentals, right? So here you're looking at 8.375 at par. Now this is 75% LTV, but 8.375 at par, 6.875 lowest rate option, right? Pretty good deal there for our 75% LTV full doc Condotel, right? Look at that, 6.875. Wow. Bank statement as well, 75% LTV here. And you are looking at 8.625, our lowest rate option, lowest cost option. 8.625, lowest cost option. 7.625, lowest rate option for our bank statement. 75% LTV, 25% down, bank statement. So purchase, self-employed borrower using business or personal bank statements, 12 months worth. And our 1099 purchase, right, of a Condotel, again, for our real estate agents out there who all get 1099s. Look at that. Wow, 8.875 actually with a little bit of a lender credit. Look at that, $375 lender credit at 8.875, and you can buy that down all the way down to 7.125. And last but not least, DSCR. Now, DSCR stands for debt service coverage ratio, which is an actual calculation. If you take the gross rental income of that property, and you divide it by the total housing expense, in this case would be principal, interest, taxes, the insurance for the interior of the condominium apartment, and the maintenance fee. Those 5 components of the payment would be added up, divided by the housing expense. And if the number is at least 1.0 or more, you got 75% loan to value, which means you can buy this property with 25% down, qualifying only on the gross rental income of the property, not having to qualify based on your personal income. You don't need to verify any personal income. You don't need to verify a job for this program. And will you look at that? 75% LTV, 3-year prepay, 1.5 DSCR. You got 7.5% interest rate with a 0.28 lender credit. Wow. And 6.75% rate now. That's pretty amazing when you consider how you're being qualified for this property. So that's why Nick was mentioning DSCR is the most popular option. But in case a property doesn't cover at 1.0 and you want to get the 75% LTV, we have the bank statement option, P&L, full doc, all the other options. But if you can qualify just with the rental income of the property, look at this rate here compared to this rate here, right? Lower interest rate for the DSCR because the DSCR is full investment. The DSCR program is only to be occupied, the property, by guests, tenants, never by the owner. So, the market feels very confident that those properties will always be generating the income they need. So, hence better pricing. So, look towards those for your Condotel loans, as well as every other option that we have mentioned here for you today.
All right, great. Surprisingly, I don't see any questions here. So I guess you did a great job explaining it, Jose. All right. Okay. Well, we'll go ahead and wrap it up then. Remember, 11 a.m. Eastern every weekday, we do this show where we go through the live rates and then do a deep dive into a different topic. So we have a new topic lined up for tomorrow. Appreciate everybody tuning in. Thank you, Nick. Thank you, Jose. We'll see you all tomorrow, 11 a.m. Eastern, for the next episode of Daily Rates Live with the Mortgage Calculator. Have a good day, everyone.
Thanks, everybody.
Thank you, everybody. Have a great day.